If you're a CIS subcontractor and you're struggling to borrow enough for your first home, this video could save you a lot of time and disappointment. One of the most common questions I'm asked is whether parents can help their children get a bigger mortgage. And the answer is yes. In some circumstances they can, but there are a number of important things that you need to know before going down that route. In this video, I'm going to ask the questions I'm asked most about getting a CIS mortgage with your parents. Before we start, it's important to remember that this video is for only general information only. It isn't about personal finance advice, and all mortgages are subject to status, affordability, and lender criteria. Can I get a CIS mortgage with my parents? Yes, you may be able to. And one of the biggest reasons people involve their parents is because they found the house that they want, but the lender won't lend quite enough. That doesn't necessarily mean you can't afford a mortgage. It often means the lender's affordability calculation doesn't quite stretch far enough. In some circumstances, adding your parents to the mortgage application may improve affordability because the lender can take their income into account as well as yours. However, every lender assesses affordability differently. So there's never a guarantee that adding your parents will increase the amount that you can borrow. That's why it's important to have your circumstances assessed before making these assumptions. Are there particular mortgage products available for CIS workers buying with their parents? Yeah, so years ago, most people talked about guarantor mortgages, but today the most common solution is something called a joint borrower sole proprietor mortgage. The name sounds complicated, but the idea is actually quite simple. Your parents may be named on the mortgage to help support the affordability assessment, whilst you remain the sole legal owner of the property. And this arrangement can be particularly attractive for first-time buyers because it allows parents to help without necessarily becoming joint owners of the home. Not every lender offers these products, and the criteria vary considerably, which is why speaking to a broker who understands both CIS income and family-assisted applications can be really valuable. Is it easier to get a guarantor mortgage with your parents? So the short answer is not necessarily. Many people assume that simply by adding mum or dad means the mortgage will be approved, but unfortunately, it doesn't work like that. Lenders don't just add another income, they also have to look at your parents' financial commitments. If your parents already have a mortgage, loans, car finance, or significant credit card balances, these commitments may reduce the affordability calculation. And I've seen these applications where adding parents made very little difference, and others where it significantly improved affordability. So every case should be treated differently. And the only way to know what's possible is to assess the whole financial picture. Is there an age limit when parents can help with the mortgage? So age is one of the biggest factors that lenders consider. For example, if you're 25 and you want to buy a 35-year mortgage, but your parents are already in their late 50s or early 60s, some lenders may not be comfortable with that full mortgage term. Other lenders may be happy to consider lending beyond retirement, provided your parents have sufficient retirement income. So every lender has different maximum age policies. Occupation can also make a difference, particularly if someone is carrying out physically demanding work. What are the risks to parents? So this is probably the most important question of all. If your parents become joint borrowers, they're taking on a legal responsibility for that mortgage. So if the mortgage payments aren't maintained, the lender may pursue anyone named on the mortgage agreement. It could also affect your parents' ability to borrow money themselves because lenders will usually take this mortgage commitment into account if they apply for credit in the future. So before entering into any arrangement, everyone involved should fully understand their legal and financial responsibilities. So both the parents and the child need good credit. Lenders will usually assess the credit history of everyone named on the mortgage application. And a poor credit history doesn't always mean the application can't proceed, but it may reduce the number of lenders willing to consider the case or affect the terms available. If there are any credit issues, it's always better to discuss them at the outset rather than hope that they just won't be discovered later. How can a specialist CIS mortgage broker help? So every lender has different affordability calculations. Every lender has different age limits, and every lender has different policies on CIS income. Some lenders are much more comfortable with joint borrower sole proprietor mortgages than others, and Specialist broker can assess your circumstances, explain the options available, and identify lenders whose criteria may be a better fit for your situation. So that can save you time, reduce unnecessary credit searches, and help you avoid applying to lenders who are unlikely to accept your application. I hope that's answered some of the most common questions about getting a CIS mortgage with your parents, because in part 2, I'm going to answer even more questions, including gifted deposits, family assisted mortgages, and whether your parents need to own their own home, and how long they could remain responsible for the mortgage. If you found this video helpful, please like the video, subscribe to the channel, and leave your questions in the comments below. Thanks for watching, and I'll see you in part 2.